Yes, I am seeing short squeezes all over the place. In many cases, they are actually being orchestrated by motivated young stock buyers who are explicitly trying to crush the shorts using websites that, frankly, are a lot of fun, but I think are encouraging people to do something that I hope they continue to make money on. They may not. And that brings me to GameStop, the troubled video game retailer. For years, this stock has been absolutely hated because the whole industry's been moving online. So shorting GameStop had been like shooting fish in a barrel. But then two things happened. First, a highly acclaimed activist investor, Ryan Cohen, joined the board of directors. Got a good track record. He's the guy who founded Chewy, the phenomenally successful online pet food retailer. Second, and more important, the new PlayStation and Xbox launched, and you can't find them anywhere. There's so much demand. Suddenly, the short sellers who'd made so much money in this stock were on the run. Remember when I said there were too many people that shorted Rutherford Bank? So I ended up getting bought in. Right now, an astounding 144% of GameStop shares have been sold short. Oh, that's far more than there is. That's not right. Shares can't be borrowed. When you can't find shares to borrow, your broker will close out your short position, which is how something like GameStop could tack on 27% today. The thing is, this is not a regular short squeeze. We have a ton of enthusiastic young buyers in this market. They love to get behind stocks and flood all the social media sites with recommendations. Think Wall Street Bets on Reddit, the popular online information site. Right now, if you go to those sites, and I encourage you to take a look at this, they're populated mostly by younger readers and participants who are plainly, openly plotting to blow up the shorts. In this case, by buying GameStop at any price and bidding the stock up, up, and up to crush the shorts so they have to cover. Get it taken up. It's incredible to watch. I think they're succeeding beyond their wildest dreams. Back in August, GameStop traded at 4. Then it went to 15 when the new consoles launched, and we realized video games would have a great holiday season. Then it jumped to $20 when the activists joined the board. And then, since then, the buyers have hit the stock message boards and urged a gang tackle of the shorts. GameStop has now doubled in 2 days. Now, with the stock just under $40, management should issue shares to pay down debt and change their fortunes. This is the perfect time to fundraise. I called them to ask them why they aren't doing it. Got no response. The short squeeze would make it so easy. Although you could argue maybe it's not ethical. It would make it easy. Oh, it's not just GameStop. There's a whole new world of stock shortages out there. There's Yum, parent of Taco Bell, KFC, Pizza Hut. They announced they're partnering with the heavily shorted Beyond Meat. So the stock jumps 13%, just like that. Or how about Bed Bath & Beyond, BBBY? That's a stock you know I like. I like it very much. After doing nothing for ages, this stock has caught fire, jumping almost 19% today. Why? Well, a poster on Reddit's Wall Street Bets wrote a piece titled, "The BBBY short squeeze starts now." Then he gave you some rocket ship emojis, of course. Then, quote, "Earnings were not a disaster, and BBBY is about to burn," all caps, "the shorters with buybacks." Others quickly joined him. Of course, Bed Bath's been buying stocks for ages. I mean, this is just another social media orchestrated short squeeze, just like I saw in GameStop, because 67% of Bed Bath's shares have been sold short. Oh, boy, that makes them short sellers easy pickings.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.